Picture this: a bustling city in Africa, filled with construction cranes, new highways, and gleaming skyscrapers. It's a scene of progress and development, as the city transforms before your very eyes. But if you look closely, you'll notice something peculiar. Many of the workers and engineers are speaking Mandarin Chinese. They're managing the construction sites, operating heavy machinery, and overseeing the completion of these ambitious projects. It's a surprising sight, and one that makes you wonder, what are these Chinese workers doing in Africa? As you wander through the city, you see more and more signs of China's presence. Billboards advertising Chinese construction firms, storefronts selling Chinese goods, and even Chinese restaurants serving up traditional dishes. It's clear that China is making a big investment in Africa, pouring billions of dollars into infrastructure, energy, and natural resources. But why? China's investment in Africa is nothing short of staggering in its scale and scope. In the last decade alone, China has invested over $100 billion in African economies, making it the continent's largest trading partner and source of foreign investment. One of the key sectors that China is investing in is infrastructure. Chinese firms have been involved in building highways, railways, ports, and airports across the continent. These projects are designed to improve transportation and logistics networks, making it easier for African businesses to connect with each other and with the rest of the world. Another sector that China is investing in is energy. China has provided funding for a wide range of energy projects in Africa, including hydroelectric dams, wind farms, and solar power plants. These projects are designed to help address Africa's chronic energy shortages, which have hampered economic growth and development in many parts of the continent. Finally, China is also investing heavily in natural resources. China has a voracious appetite for commodities such as oil, gas, copper, and cobalt, which are essential for its manufacturing and industrial sectors. To secure these resources, Chinese firms have invested in mining and extraction projects across Africa, often in exchange for long-term contracts or ownership stakes in the resources themselves. Taken together, these investments have the potential to transform Africa's economic landscape, creating new opportunities for growth and development. However, they also raise a number of questions and concerns, particularly around issues of debt, labor standards, and environmental impact. China's investment in Africa is driven by a complex set of economic and political motivations. On the economic side, China sees Africa as a key source of natural resources and a growing market for its products and services. With its own domestic economy slowing down, China is looking for new opportunities for growth and development, and Africa presents a promising frontier. At the same time, China is also using its investment in Africa as a way to expand its global influence and counterbalance the influence of other major powers, particularly the United States. By investing heavily in Africa, China is demonstrating its commitment to the continent and building strong relationships with African governments and business leaders. One of the key ways that China is using Africa to secure access to natural resources is through its investments in mining and extraction projects. China has a large appetite for commodities such as oil, gas, copper, and cobalt, which are critical for its manufacturing and industrial sectors. By investing in African mines and other resource extraction projects, China can ensure a steady supply of these commodities and reduce its reliance on other countries. In addition to natural resources, China is also investing in other strategic sectors in Africa, such as infrastructure and telecommunications. These investments not only help Africa develop and modernize its economy, but they also provide China with a foothold in key industries and access to valuable technologies. Ultimately, China's investment in Africa is driven by a desire to secure its economic and political interests on the continent and beyond. While China's investment in Africa has brought many benefits, it has also generated controversy and criticism from some quarters. One of the most persistent criticisms is that China is engaging in debt trap diplomacy, that is, using its investments to saddle African countries with unsustainable levels of debt that will ultimately give China greater political and economic leverage over them. Critics also point to concerns about labor and environmental standards. Some Chinese companies operating in Africa have been accused of mistreating workers, engaging in illegal activities, and ignoring environmental regulations. These concerns have led to protests and calls for greater oversight and regulation of Chinese investments in Africa. Anyway, that concludes our exploration of China's investment in Africa. Thank you for watching and stay tuned for more.